All right, welcome to another new video here. And you guys already know what the channel is. The channel is Ola TV, the official YouTube channel. But by the way, this is also streaming on Facebook, YouTube, Twitter, and Twitch. And yes, I said Twitter twice because I did go ahead and make a secondary Twitter channel. So we have two Twitter channels now. The first one is Coachman TV, which is the original, and the new one is Ola TV official for those who want to follow that one as well. I'm going to start posting on there. So we'll have two Twitters, one Twitch, one YouTube, and one Facebook. On this one, we're going to go ahead and discuss why the importance of the fear and greed index is something that you should be paying close attention to. So here we go, guys. We're going to go ahead and get started. We're going to go ahead and start this in just a moment so that you guys can go ahead and stay tuned and be up to date on why the trends of the fear and greed index is vital and important for your investments. So here we go, and let's get ready. All right, everyone. Thank you so much. I hope you guys like that new intro. Just want to make things look a little bit more professional and obviously a lot cuter for the channel. So, again, this is the Ola TV's official YouTube channel. Some of you already know it. So, we're streaming on Facebook, YouTube, Twitter, two Twitters, and one Twitch. So, it's going to be five platforms now. Well, four platforms, uh, five total. So, today's topic, what is it that we're discussing today that's going to be of great importance to you in this space? So, the importance of what we're going to be discussing today is this: the fear and greed index, right? Why is this vital? Why is this important? Why is this essential? Why does this even matter to you? So, we're going to go ahead and get into it right now. Before we do, we're going to go ahead and switch over right here to the Coin Gecko so that you guys can go ahead and see what the markets are currently looking like, so we can make sure that you understand why this topic today is going to be vital for you, so that we can make sure that you are staying tuned and up to date. So here we go. All right, so to go ahead and get started, right, we've got in this space right here, we've got the CoinGecko website, which is one of the few websites that's going to show you what's going on currently. So as you know, usually on the weekends, the markets are currently not moving. So whatever happened pretty much ending on Friday is what you will see, as of right now. This is currently up to date as of 3:44 a.m. Eastern time on February 21st, 2022, which today is Monday, which is Eastern time for me on the United States. So depending on where you are, will determine what time this is currently being uploaded for you. Now, getting back to the topic at hand here. So if you look at here, guys, there was a huge crash at the moment. If you notice, Bitcoin's always going to be at number one, obviously. It's the grandfather of, all of crypto. It dropped from, I believe it was about 47,000 down to 39,000. It dropped from 47 to 45, then from 45 to about 43. It was holding there pretty strong around 43, then 42, and then it just dropped back into the 30s again to 39K. So a lot of people are getting scared, that they're worried that their investments and money is going to be a loss. But if you look at this here, you can see within the last hour, it's already going back green at 0.2%. And in the last 24 hours, it's gone up 2.1%. And if you look also at the Ethereum is currently holding at $2,700. Looks like it's also in the green again within the last 24 hours at 4.3%. And if you guys go ahead and look down here to number 14 and number 12, Doge still holding at number 12, even though it hasn't done much action. And you've got Shiba Inu here holding within the 27.29 marker. It's up 8%, and it's been 9.5% down for the week. Not another notable one, in case you guys are not familiar with this one, in the top 16, you've got Polygon Matic up 5.2% within the last 24 hours. So as you guys can see, even though the blood has been spreading badly in the markets for the past couple days, last week, you can see that slowly but surely, the trends are going green again. And this column right here, if you look at this column, this is the column. This column right here in the middle is the column for the last 24 hours. This column is for last week, the last 7 days, and this one's for the last 1 hour. So within the last 1 hour and within the last 24 hours, everything is starting to trend green, even though at the moment these graphs are showing red because they're still reflecting the old information from last week. But once the markets reopen, you'll start to see that the patterns will change. Now, getting to the actual topic at hand that we're looking to discuss today. The actual topic that we're looking to discuss today, as you already know, as I stated before, is the fear and greed index. The fear and greed index. This is something that I've talked about in a previous video. And although I talked about it in a previous video, I wanted to go a little bit more in detail about it to spend some time just very quickly discussing why this is important and how this is going to go ahead and help your investments. So the reason why this is important, and before I continue, for those who don't already know, read the disclaimer on the bottom. Just wanted to put that out there both on the comments field and the banner that I am not financial advisor. This is not financial advice. This is all just my opinion. It is content for educational purposes only. So any investments that you make are your sole responsibility. And therefore, just make sure to invest at whatever is feasible and optimal for your portfolio. Now, getting back to this fear and greed index, right? So when the week ended, we were at extreme fear, meaning 25. The highest this can go is 100. I don't know if I've ever seen it at 100, but I have seen it within the 70s, the 80s, and maybe even the low 90s. So if you look at that graph, right, that's where we ended at 25. Now let me show you the actual graph of how it looks like, so you guys can look at trends, right? Because it's not just about what's going on, recently. So it's more important about what's been going on lately. So here's the last 7 days, right? Look, dating back to February 15, 2022, which was about 6 days ago, you had the market at 46. So 6 days ago, people were still feeling confident. Then you had 51. So that's neutral. That means that now it's getting closer to the yellow and the green, and people were feeling confident. The 17th of February, which was only about 3 to 4 days ago, it's at a 52. So now it's getting closer to, that green. And all of a sudden, out of nowhere, on February 18, it dropped to a 30. So now people got nervous, not sure why. But I can probably gather an idea of what I've seen just based on some research that I've done. And then February 19, it continued to go down to from 30 overall to 25, then 27, and then on February 21st at the moment is showing 25, but the markets haven't yet opened up. So that could be subject to change throughout today, tomorrow, and the next day. So that is the current trend, right? For the past 6 or 7 days. Now let's look at the trend for 1 month here, right? So look at these trends. If you're going back to as far as a month ago, which would be roughly starting from January 23, it was as low as 11. So it was super low. So a lot of people just did not have confidence in the market. A lot of investors were just liquidating. Then you had a 13, 12, so it was still trending low. Then it started going up to 23 towards the end of the month of January because a lot of good news started coming out in the crypto space. Then 20, 24, 24. So it's in the 20s. Now it's going to 29, drop to 20, goes back up to 26. So you see it's trending within the 20s. And then once it gets to February, now you start seeing a leap. So on the 5th, it jumped to 33. Then you see it jump to 45, 48. Now you see it at 54, I believe, was the peak so far for this year. 54 on February the 9th. And then slowly but surely, it stayed within the 50s. Now it started, going through the 40s and then 50s again, and then dropped to what we just discussed a minute ago, which is in the mid 20s. So what does that tell you? What that tells you is that every time there's new information that comes out, whether it be on social media, whether it's on the news, whether it's on certain apps, whether it's whatever way you get your information and get your news, most people are out there running scared at the moment because they allow their emotions to get into their investments. So a lot of people, when they get a little bit nervous, they get a little bit scared, they kind of look like this, They kind of look like they look like Bernie Sanders, just sitting there looking a little bit annoyed, frustrated, or sleepy. So a lot of people have this face on, and the thing is that you can only do so much, with the markets. You know what I'm saying? You've got to be able to keep your head aligned, stay focused, and not allow yourself to to get frustrated. You can't allow yourself to be able to get upset when it comes to the markets going low. Obviously, it's going to impact you because everyone doesn't want their finances to go low. But here's the thing: if I were you, if I'm being 100% honest, this is how you should be looking right now. You should be dancing. You should be happy. You should actually be breakdancing and be excited. Why? Because the honest truth is this: when the markets have fear like this is when a lot of the big whale investors get in. See, they like to manipulate the markets. They like to play with the markets. And so what happens is that a lot of them will pull out their finances, like they'll pull out a lot of their Bitcoin and Ethereum and other coins like Shiba Inu and Doge, etc. They'll pull it out when they have insider information that either the markets are going to crash or that a war is going to happen or that something's going to occur that's going to impact crypto or the stock market or both simultaneously. So what happens is that they know what to do, they know when to pull out, and as soon as they do that and everything starts going a bloodbath and everything is like getting shredded to pieces, this is everyone's reaction right here.
Oh shit!
So as soon as everyone is reacting like that, what happens? Friends tell family, family tell family, and of course the markets start to hit the 20s, as we've seen recently, which is what's going on right now. As I showed you guys earlier here in the 7-day trend on this side, you've noticed that it went from high to super low, right? And then when I showed you the 1 month trend, as you did see going here, I did show you that again. We went from 20s to 30s to 50s back to 20s, right? So for me, I'm going to hold my position. I can't tell anyone what to do with their information that they receive with, excuse me, I can't tell you what to do with your portfolio or with the information you receive or what you believe or do not believe. But all I can say is this: if you keep your head strong and you stay focused and you make sure that you keep yourself aligned and you have a plan and you have a blueprint for situations like this, then when the markets tank, it's not going to scare you. Why is it not going to scare you? Because you have a plan set in motion where you're going to see this in a positive aspect, right? Because the thing is, when the markets are red, that's typically when the whales are jumping back in. And if the whales haven't jumped out, then that's typically when they double or triple into investing. So if they still have their money there, which at the moment, a lot of the whales reinvested recently, as I showed in a previous video, if you haven't seen that already, a lot of whales jumped back in. One of the whales in particular had bought 500 billion coins, which is equivalent to 10 million US dollars, right? So that happened recently. That happened just weeks ago. And also, two other big time, three-time big investors that are whales as well had also invested close to the same amount of figures. I think it was like either 3 million or 5 million or something like that, which is several hundred billions of Shiba Inu tokens. So you got to think about it. As I always say, follow the money. The money tells you the truth. Don't listen to social media. Don't listen to all these scam artists on YouTube telling you to get scared and pull out and it's crashing and this and that, bro. You've got to look at the numbers, you got to look at the trends, and you've got to follow the whales. If the whales are going in, you go in. The whales are going out, you go out. And again, I'm not a financial advisor, but that's one of the best methods. Or you can just let the money ride out. Because for me, I'm looking at these coins as long-term investment. And I'm looking at it more for like a 2-year plan, 3-year plan, 5-year plan. A lot of people like to do the pump and dump where they like to wait till it's really high, cash out, wait till it tanks, get back in, and they like to play with it. And sometimes you can't predict the markets. Nobody really can predict the markets. Some people just really get good at analyzing or get good at, just jumping in, jumping out the right times. But everybody that does pump and dumps, eventually you get hit. You get the negative impact from it because you can't really predict the volatility, especially in crypto space. A lot more volatile than regular stocks. So you've got to think about that. And if you're looking at the short-term goals, then maybe pump and dump makes more sense to you. But if you're looking at this long term, you've got to understand that all these coins, right? They're always going to have moments where they're either to drop or get pump and dumped or tank for a little bit. And what do? They go back up. Same thing with stocks. If you look at Amazon, right? Amazon has had moments where it crashed as well and tanked in the past, but ultimately, if you look at it long term versus short term, if you look at the graphs, what direction is the graph continuing to go? it goes up, because it's just going to continue to go up. That's just what, that's just what the markets do. Yes, they're going to have situations like this where there's a bloodbath, but ultimately the direction is going to continue going up. So again, I'm not a financial advisor, but just, providing what I've researched and my feedback and my personal opinion, from the things that I look at. Now, if you look at this here, if we want to go out further than 1 month, right, just to show you guys even more trends, let's do a 3 month analysis on this one so we can see what the trends look like, right? So if we go back here, look at this, going back to as far as November 24, 2021, this was 3 months ago. So we had the 42 on November 24, dropped to 32, up to 47, tanked to 27, up to 40, and then it was kind of playing around with the 30s. And look at this, it went as low as 18 and 16. This is how scared people were back in November and December. And to be honest with you, if you were watching what the whales were doing, the whales were actually reinvesting around this time frame between November and December, because most people at that time, they're either spending money on, Christmas, they're spending money for Thanksgiving, they're spending money for vacations, they're traveling to drive to, out of state. So a lot of their, a lot of money for the natural human being, average Joe, you make between 30, 40, 50K, 60K, 70K. A lot of times they're not going to have that much money to either reinvest, or they may take some of their money out to be able to, enjoy the holidays, which is natural human being instinct. But the whales, the big cheese, the big top dogs at this time, if you actually conduct your own research, because I've done it myself, they were having themselves reinvest here, not just in crypto but in stocks. And then they took out early January, and then they came back in late January and early February. So they have these trends where it's kind of like they study the movement, and if they feel that the markets are oversaturated, they pull out, and when they feel that the markets are undersaturated, they jump right back in, and they pay attention, and they know human emotion. So human emotion and human instinct is take money out for the holidays and spend it on crap. Investors like Warren Buffett's of the world, they don't look at the world like that. So that's the reason why they went ahead and started getting back in. And that's why you notice that when it started tanking in December, little by little, in the middle to end of January, that's when it starts going up. But that's because investors already had their money in there, and they just started throwing more into it. Other people who were not paying attention to the trends thought that now was a good time, so people started jumping in late. And then all of a sudden they got scared again because they heard bad news about the war and all this other stuff and inflation and everything else, and the possibility of also crypto space getting taxed. That's another big thing that's going on, is the regulations of potentially that they may try to add the regulations in 2022 to impact your taxes. That's also scaring a lot of people as well. So you've got the human emotion for the holidays, right, to end the year. Then and then to start the year, they kept emphasizing more on regulations that may potentially impact your crypto money and your taxes, etc. And then you have the current situation with the war, which is with, the whole thing with Russia possibly invading Ukraine, right? So when you have those juggernauts, those juggernaut size impactful news that's on a negative scale and not on a positive scale. Believe it or not, anytime that there's like a war or anything related to taxes or anything related to the economy struggling, etc., it tends to impact how people invest. And then ultimately, that also impacts the markets, because if there's a lot of liquidation and there's a lot of pump and dumps, that's going to impact, the markets. And it's not going to impact it in the upward direction. It's going to go to a bearish direction, which is downward. So take all of that with a grain of salt, because now that the war potentially, where Russia is going to attack Ukraine, and now the US is saying that they may get in there, and then they might have NATO and all this other alliances try to jump in to prevent Russia from, the invasion of Ukraine, and also prevent them from continuing to take more of the more of the control. um if we're going to actually go into the war, which it's possible that we may, I don't know yet if we're actually in it already or going into it, but all I know is that that is the main thing that's impacting right now. And anytime that there's negative news like that, for whatever reason, I can't really explain it to you, but for whatever reason, it tends to make the markets get hit negatively. And when that happens, people liquidate, and then that becomes a domino effect or a snowball effect, where now you've got the news impacting it. You got people getting liquidity out of the accounts, and then that just creates, a whole downward spiral for the markets. So you've got a lot of different things in the last 2 or 3 months. You know what I'm saying? You've got people liquidating for the holidays, people with the fear that they're not going to make money anymore because they think that the markets are crashing. You've got the war situation, and then you've got the possible regulations on crypto and the possibility of those regulations impacting your taxes when you file. So it's a lot of different things, you know what I'm saying? And of course, emotion is always going to grab people first rather than critical thinking and logic. So just wanted to say that, this is your opportunity, this is your time to shine. And if we go even one more step back before I even close out this video, because I'm pretty much at the very end of this video here, but look at this. 1 year back, right, as far as February 22nd, 2021, look at the trends. You see this? Look at this. Look at the highest it's been. Last year it was at 94 on February 22nd. Let me pull this back a little bit. Look, no, excuse me, February 23rd, a 94. That was literally about 363 days ago, almost a full year ago. At 94, I think that's the highest I've ever seen the fear and greed index. Now, 94 doesn't mean a bad thing. So I know it's called fear and greed, but a 94 means that people are greedy. So the higher the number, the greedier the people are, which means the more they're going to be investing. The lower the number, that means the more fear that they have, which means the less likely that they are investing, the more likely that they're pump and dumping. They're probably also liquidating the accounts, and they are less likely to go ahead and either reinvest or add additional funds to their current investment. So remember, the lower the number means more fear. People are more scared. The higher the number means people are greedier and they're investing again. So that's why it's called the fear and greed index. Red to yellow means fear or neutral, and then yellow to green means, people are starting to get back into it, or they're getting greedy and they're really, really throwing their money back into the markets, exponentially on that. So that's how you figure that one out here. So these are the charts for 1 year ago. And if you follow the charts, a lot of the times, if you go back a year ago, it's going to show you when people start to reinvest. Last year, with the boom happened between the months of February, March, April, and May. That was the huge Dogecoin rally. That was the huge Shiba Inu rally. Just meme coins in general, and even Bitcoin and Ethereum. Just every a lot of coins, Polygon Matic, etc. But here's the thing: even though it was booming, late February, March, then it went a little bit down, then it peaked again April, and it really peaked in May, and then by June it started going down again, and July too. Then it started going up August, September, and then it went down, a little bit October, then it peaked end October, then it went down November, went down December, went down early January of this year, and then now peaked late January 2022, early Feb, and then now late Feb it's going down a little bit. So what you have to notice about that is that if you even go back a year ago, not 2021, go back to 2020, a little bit over a year ago, go back 1 year and 3 months ago. All right, so go back 15 months ago. If you look at it, the whales and the big investors, they weren't jumping in February, they weren't jumping in March, they weren't jumping in April. They're early investors. They get insider secrets, they know when to jump in and when it's going to peak. They were already jumping in for November 2020, December 2020. And mind you, 2020 was still when the pandemic was really bad. And as a matter of fact, the holiday for 2020, a lot of people weren't traveling because the pandemic got so bad. That's when cases started to skyrocket. If you go back into time, March, April, May of 2020, that's when everything tanked because the pandemic first started. Then we went to lockdown. Then in the summer, people tried to like reinvest. Pandemic was going down. Then it started to skyrocket again. Then it went down again, and then it kept going down. And then eventually in 2021, it started doing its thing, with the whole Doge, Sheeb, and everything else. So if you look back at it, the investors were getting it early because think about it like this: am I going to want to pay top dollar for a coin or for a stock, or do I want to wait till it's low and it's at the lowest that it can be so that I can get it that way when it pumps back up, I can actually profit? Because if you buy at the top, you're not going to get a lot of profit. You might get some profit, but it's going to be very minimal. If you're at the very bottom, the lowest that it's tanked, and you're investing or reinvesting there, by the time that thing starts to skyrocket, you're gonna make profits of 30, 40, 50%, maybe even 80, 100%. Some people have seen as much as 200%, 500%. Again, this is not financial advice. And just to let you know, past results are not indicative of future results. However, if you've studied and you've watched the trends, the markets, and you've watched how things go, and you should know that when it's red, when everything is red, what does that mean? Everything is on discount. Everything is on sale. That's how investors look at it. They look at it as everything is on sale, and this is the perfect opportunity to get into the game. I can't tell you when to get into the game, but I can tell you that that is the usual trend. And that is a smart trend, because why would you want to buy something for triple the price and then only make a few bucks on it when you can buy it at like 50% off, and then you can resell it, when it's like 200% up. You know what I'm saying? It's just basic math. It's just basic business. That's just basic, economics. So that's what you want to do if you're looking to get into this space. So think about it, guys. That 1 year trend, going back to that, I mean, look at this. Look at this. This was Feb. Look, March, March. Look at this. This is all March. This is all the Doge and Shiba rally. Look, April. See what I'm saying? Then look, it tanked for a little bit. People started getting scared. But then what happens? Look, it started skyrocketing again. It didn't really tank until like mid-May. And then it stayed low, just like I was just telling you. And then look, starts going up, boom, everything started looking good. But then what happened? Cases started going up. So as soon as cases started going up, people didn't want to travel anymore. So look, it started tanking. People didn't want to invest. People didn't want to live a normal life. So they guys started getting scared. And what happens? Look, towards the end of last year, look at this. It pumped in October as high as 82. Look at that. And then it stayed in the 70s for a while. And then people got scared again. People needed to go travel. People wanted to spend time with family. People start liquidating. People start getting scared of the markets. People are spending money on PlayStation 5s and TVs and all this other crap rather than keeping their money growing. And look, this is how it's been for a while. And then now look, back up in Feb. You see what I'm saying? And this is the end of Feb. And if you look back at the end of Feb last year, what happened? 94. We're not close to that yet, but it only takes like a few days for it to get there. So I think, in my opinion, it's gonna do something similar. May not happen on the exact same dates, but I think it's gonna do something similar. In my opinion, I think it is gonna do something similar. Um, so it is what it is. So take this with a grain of salt. Again, it's not financial advice, but here to go ahead and just provide for education purposes only on my own opinion. Do your own research if necessary, and also make sure that you take the sole responsibility for any investments that you do on your portfolio, because it is your decision. And again, guys, don't be one of those people that, you know, you end up wishing and end up hoping and praying that the markets tank again. And then when it tanks, you don't do anything about it. Because a lot of people do that. They wait for the markets to drop. And then when it drops, they do nothing about it. They liquidate low, they buy high, and they don't sell at the right time. They don't collect profits at the right time. They don't reinvest at the right time. And all I can tell you is this: it's not always going to be this opportunity. I mean, we had one or two opportunities last year, and so far this is the first one this year. So there's not a whole lot of opportunities when the option to buy at a discounted price for whatever portfolio investment you want to do is going to come at a greater time than now. You know what I'm saying? Money doesn't wait for those who sleep. Money doesn't wait for procrastinators, and it doesn't wait for lazy people. Money comes to those who have a sense of urgency and a sense of action, and you've got to take action for yourself. Don't end up being like this guy.
Oh, you almost had it. You got to be quicker than that.
Yeah, you got to be quicker. So don't be slow. You waste time, you're not making any cash. You're not making any money. So there it is, folks. That's what I have for you today. Hopefully you take this with a grain of salt here. The Fear and Greed Index, again, is what this is called. There's two or three different websites, but the one that I typically use is called alternative.me /crypto / fear dash and dash greed dash index forward slash. Just Google fear and greed index. You should be able to find the one that I have, or you should be able to find one that's close enough or similar to it. And as you can see, we're still at a 25 right now because people are still a little bit into that fear. But you know who's not in fear? The whales and the big time investors, because they have not pulled out of this just yet. So just letting you guys know that again, follow. If you're gonna be a follower, this is the only time to be a follower. Follow the leader. And the leader is who? The big whales, the big cheese, the big investors. Okay. So with that being said, guys, I hope that this information was essential to you. I hope this information helps. Don't forget to like my video. Don't forget to leave a comment. Make sure to subscribe. And also, guys, make sure to follow me on all of the platforms that I have available. So if you're ever watching a video and it's lagging, you can have the opportunity to keep up to date. Let me go ahead and put it here for you guys. These are the platforms that I currently have available. So I just wanted to go ahead and give you guys that information. Let me go ahead and post it just one more time here. Boom. YouTube, Facebook, Instagram, Twitter, and Twitch. If you need to watch the recap to this video, just go ahead and skip to the end, pause it right there, and you'll be able to go ahead and follow me on all the platforms. And if you're enjoying this video or any videos in the past, please feel free to go ahead and just give me a direct message. Let me know you like the content. Let me know if there's anything more you would want me to speak about. And just to let you know, pretty soon, we are going to go ahead and get back into sports as well. Obviously, not NFL or college football because of the fact that, that sport is pretty much done. I mean, if there's new highlights about it, I may go into it here and there because there are a couple of things that I did want to talk about NFL, even though the season has ended, just a couple, changes, updates, or just rumors and conversations and stuff. So you may hear me talk about NFL or college football soon again, even though the seasons are not going to start up until about, 7 months from now. But it's okay. There's still a few things we could talk on that. But I will be switching over to NBA, NHL, possibly soccer, who knows, maybe even tennis and MLB, baseball. So a lot more content is going to be coming on the way. Right now I do really enjoy talking about the crypto space. It is a good space. It is a lot of opportunity, and I find it very enjoyable to not only research but to watch videos, look things up online, and just stay up to date overall, and also provide that feedback to you in the event that this is something that you're into or that you might want to get into but are not sure of where to research or where to get your info or where to find trends or just in general if you just don't know much about the space for this industry. So I want to thank you guys again. Don't forget, like, comment, subscribe. I appreciate your time. Thank you so much for tuning in. I hope you guys have a great and blessed evening. If you're in the daytime, I hope you have a great rest of your day. Stay tuned. More videos will be on the way. Thank you so much for showing your support, and I appreciate your time. Have a good one.